Hey, and welcome to this edition of Talking Realty with Mike. So today I wanted to make a quick video for you guys to explain a little bit about mortgage interest rates, where they're at today and where they're going to be at in the future, and how it affects you as the consumer, not only on a month-to-month basis, but also for the complete term of the loan. So what I want to do is start right now a little bit about the interest rates and where they're at today. And right now they're about 3.5 to 4.25, depending on the type of loan that you get. Now we'll use a $200,000 loan, 30-year fixed, just keep it basic. So on that $200,000 loan, you're looking at about a $900 per month payment. Now, of course, that doesn't include your taxes and insurance, but it gives you a basic idea of where you're at. Now, the Economy Forecast Agency has projected our interest rates to be closer to about 5.5% here in the next few years. Now, how that correlates to you as a consumer on that same $200,000 loan, your payment now is going to be around $1,135. That's almost $250 more than what you were paying on the lower interest rate. So you can see how that affects you on a month-to-month basis. Now let's look at the complete term of the loan. Now on a 3.5% interest rate, you're going to be paying about $123,000 in total interest. That's a lot of money, but it gets worse. On a 5.5% interest rate, you're looking at about $210,000 worth of total interest paid. That's almost double what your initial purchase price is. That's crazy. So hopefully that helps understand why now is the time to get into buying real estate, whether you're upsizing your home or downsizing your home, and why it'll save you a lot more money if you buy here in the next few months than if you do wait for another year or two. So hopefully that helps explain a little bit about interest rates, where we're at today and where we're going in the future. Next, I want to talk a little bit about the amortization schedule and how those interest rates affect your monthly payments. So let's take a look at this amortization table. Now, first, to let you know, I like to use a website called bankrate.com. Very user-friendly, and as the calculator right here, you can see I put in $200,000 at 3.5% interest. And you see the pie chart over here and how much goes to principal and how much goes to interest. Now, on the first table here, day one, and I've highlighted day one here so you can see. The monthly payment's about $898, and look how much goes to principal, look how much goes to interest. Now, as the days go on, or as the months go on, you can see how the amount of principal that you pay out of each monthly payment goes up, and the amount of interest you pay goes down. Now let's take a look at the end of the loan on the very last day. Now look at this. You've paid a total of $123,000 in total interest, and it also shows you here how much of that payment's going to principal and how much of it's going to interest. So let's take a look at a 4.5%. I tell you what, let's go ahead and do a 5.5% interest, and it really shows you what you possibly could be paying, a few years down the road. So as you can see, pulled up the same sheets. You know how to read them. So here you go. Look at this. I mean, absolutely amazing. And look at this total amount of interest you're paying. So anyways, I hope that was helpful in explaining interest rates and why now is the time to buy versus a couple years down the road, because it's just going to cost you a lot more money. And if you have any further questions dealing with these type of mortgage loans and interest rates and things like that, go talk to a local loan officer. They'll be more than happy to sit down and talk with you free of charge. So leave your questions and comments below. If you have any, I'll be more than happy to do my best to answer them. And appreciate you talking realty with Mike, and we'll talk to you next time.